And we also think there's issues with respect to the coming S&P inclusion.
Hey, it's Kevin. Welcome to another exciting episode of Tesla Today. And of course, we are talking about this is the week, not a week. It is the week because Tesla enters the S&P 500 next Monday. So that means all the big hedge fund people and the people that track the index have to own Tesla by the close of business this Friday. That's 2 p.m. Colorado time, 4 p.m. Eastern time. This Friday, if they want to track the S&P 500, they must be included. Now, what are the main three indexes that we talked about? One is the Dow Jones, made up of the top 30 companies, has 30 companies that make up the Dow. Then we have the S&P 500. You can infer by the name 500 means it tracks 500 companies. And then we have the NASDAQ exchange, which I just happen to know is 3,153 companies make up the NASDAQ. Wow, Kevin, you are so smart. How did you know that? Wow. Alexa, how many companies are in the NASDAQ?
There are 3,153 NASDAQ stocks.
That's what I thought. And many of you are saying, hey, Kevin, what are you doing with your hard-earned Tesla stock? Are you going to sell it or are you going to hold it during this S&P 500 inclusion? One, do you think it's going to stay at these elevated levels going forward in the next few weeks? My answer for me, and this is not financial advice, is no. I plan on exiting my entire Tesla position at a price target of $675 a share. It could be $5 less than that. It could be $5 higher than that, depending on what the market conditions that's happening in the macro environment during that time of sell. I anticipate that sell happening either pre-market Wednesday morning or during the early morning hours of Wednesday to hit that price target. But Kevin, couldn't it go to $800 a share? It could. I don't have a crystal ball, so I'm going to play it safe for my needs. So why am I selling? I want to retire from my government job. But Kevin, can't you retire? You're already a millionaire. Yeah, we could retire and be pretty comfy. But what I want to do, and I'll show you this, I need $126,500 is what I need to buy back about 2.5 years of service credits for my government job. If I'm able to sell at $675 of Tesla at that rate, and then hopefully hoping to see a pullback, no guarantees, right? But I believe there's better than 50-50 odds that there will be some type of pullback after the S&P 500 inclusion or shortly thereafter. I'm talking about a pullback of somewhere between 10 and 20%. So the level of Tesla going from $675 maybe down to as low as $550 a share, and then I will buy back in and push all the chips back in. That'll give me a net profit of about $250,000. That will more than almost double the cost of the $126,500 I need to hopefully retire and get the wifey on board with that. But Kevin, couldn't Tesla go down even lower than $550 a share? Yes, my friend, it could. But remember, pigs get slaughtered. Everybody thinks they're smart on the market, including myself sometimes, and it has not worked out well. So I'm keeping very, very conservative figures, what I would consider reasonable moves during all my research and education of what I will see happen. Could happen completely different, and I miss both marks? Yes, it could. That is called your risk tolerance. I have a higher risk tolerance. My wife has a lower risk tolerance. Somehow we have to find a happy medium in between for our investment strategy going forward. And that's natural, right? I have over 2,000 hours invested in nothing but Tesla. I'm one of those financial Tesla geek nerds. I got the hat, I got the car, I got my face mask that says Tesla, I got Tesla t-shirts. I am the ultimate Tesla fanboy geek. But that's because I feel so much more comfy in that water because I've been swimming in it now for more than a year. I don't expect my wife to be as comfy as I am. So something to think about. What is your comfort level in that Tesla water? When do you need that money? Are you in a qualified account like I am, where I'm trading, where it's tax deferred and I have no short or long-term capital gains tax implications? Or are you trading on Robinhood or Webull or Stash or something where you will have to pay taxes? It changes all those hypotheticals. It's time to hear from our favorite bear. I'm sorry, not favorite. Kind of an ass clown, Gordon Johnson.
But I think there's other issues that we can get into. A couple of actions Tesla has taken recently that suggest demand is really a problem. Right. So I think what's important is, look, we're the biggest bears on the street. And we know that Elon Musk, has cut the production, et cetera. And we also think there's issues with respect to the coming S&P inclusion.
And I mean, I was going to say that all of this you're pointing out here, as we look to that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. We think it's going to head there. We think it happens next year. We think
60 to 80
competition is going to be a
bucks.
problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?
Correct.
Why is Jordan such an ass clown? Well, I wouldn't invest my money with him. Let's look at his return rate for this last year. Out of 7,000 analysts, where does he place? Oh.
Walk me through your thesis.
Right. The thesis is simple. Tesla's currently trading at about 200 times earnings, whereas on average, automakers trade around 6 times earnings. Tesla is seen as a technology company, but they don't have the technology that people think they have with respect to there's no there with respect to the batteries. And with respect to S&P inclusion, I think this is important. Since the S&P announced they were going to delay the inclusion about a month and a half ago, or they were going to include them about a month and a half ago, there's been about 1 billion shares traded. And prior to that, when they reported a profit in 2Q, there was 1 billion shares traded around that time. However, based on the S&P's own estimate, there's about 130 million shares that need to be purchased by indexed fund holders. So the point is, on that inclusion, you're going to potentially have a lot of shares that have been front run on this inclusion that are going to have to be sold. So you could have a significant sell-off on Friday or before Friday as some of that money that went into Tesla stock looking for inclusions comes off.
But I do like this point that actually Gordon brings up here. Was there some front running done possibly for the S&P 500 of Tesla stock? Yes. Do I believe it's going to pull back? Yes. And I certainly hope so, because that's an amazing buying opportunity.
Now, to your question of what our thesis is, listen, next year, right, Tesla has only been profitable 4 quarters out of their entire existence as a company since 2016, excluding credit revenues. These are government-funded revenues that Tesla gets. They weren't even profitable last quarter. Next quarter, for the most part, we believe those credit revenues significantly fall and in 2022 go away. The reason is because every automaker is now selling their own EVs. So if Tesla goes back into loss-making status, and when you add to that the fact that even the big jump in their Chinese revenues, their market share in China only went from 8% to 12.5%, October to November. The prior high this year was 25%. So they're losing market share in China, and their EU market share has fallen from about 33% in Q4 to around just above 10% right now. So in the markets where you have competition, they're losing share. So as their growth slows, as their earnings turn back negative next year, we think there's going to be a significant sell-off in the shares. Institutional ownership right now, 41% roughly, nearly an all-time low. As people start to sell those shares and the retail money, which is driving the stock, starts to sell, we think there's going to be a swift downdrift in the stock. You've seen this before. I know it sounds crazy. Look at Tilray. Look at SunEdison. Look at SunTech. Look at some of these stocks where they went from 5 to 300 back to 5. They went from 2 to 300 back to 0. It does happen, and we think Tesla is a prime candidate.
Okay, interesting case there. Yeah, especially because there's so many who are very bullish on the stock. Gordon, it's good to talk to you. Gordon Johnson, GL.
So that's going to be a wrap for today on day 1, Monday, as we head into the S&P 500 inclusion. We'll be doing a video every single day this week through all the rapids and the volatility that we expect from trading Tesla in this S&P 500 inclusion week. Will Gordon Johnson be right? Will Tesla fall off the face of the earth and be worth absolutely, what, is that a tenth the price? 60 to 80 bucks is what he said. So if we're trading at 680, 10% of 680 is 68 bucks, and that's what he's calling for. So that means Tesla would lose 90% of its current market value. Is that going to happen within the year? I think not. No, I'm a Tesla bull, love Tesla, looking at buying Tesla after the little hopeful pullback after inclusion. Thank you for watching. Thanks for your support. Put your comments down below. What do you think is going to happen this week with Tesla stock? And what is your strategy? You've been watching Tesla Today.